Hi guys, Yong here. One of the members in the group, Wei Jie, actually asked me to look up on Goldman Sachs, right? And then that's what I'm doing right now. So I'm looking at Goldman Sachs. What is this company? So for those of you guys who don't know what Goldman Sachs does, right? It's a global investment banking firm that will really do all the big buying and selling of all the smart money. They call it the smart money lah. Okay, so from here we can see that the price to earning is 7.84. That's relatively cheap because we are actually going for stocks that are below 12. Okay, but then when we take a look at the PEG, the price to earnings to growth model, it's actually 5.28, whereas we're only looking for stocks under 1. So there's a bit of discrepancy here and there. So yep, with regards to it, Goldman Sachs is one of the biggest company there. In fact, the next biggest competitor is Morgan Stanley in terms of investment banking firm. Now, JP Morgan is a bank, right? It's slightly different. This is an investment banking firm, so it's slightly different. Okay. So when you take a look at the business analysis, this is what I feel it is lah. Because okay, sorry. So from what I see here, it's intangible assets, yes. Network effect, no. Monopoly scale, yes. Cost advantage, yes. Switching cost, yes. Pricing power, yes. Macro and micro analysis, I have here, yes, no, yes, no. Okay, but when you take a look at the financial assessment, it seems like it's doing quite poor. You see, take a look at here. There's only 3 green bars, which is 3 good, and then there are 5 poor. And then when we take a look at the red flag indicators, we can see that there's a couple of red flags. In fact, majority of them are red flag that we should be aware of. So with that, we actually failed our confidence rating of 4, and then our growth entry price for intrinsic value is $181.15. Currently, right now, it's at $198.23. So that's something that we should be aware of. Also, it's quite near our intrinsic value in terms of growth, and also I'll share with you guys later more about it. Okay, so dividend for entry is $63, and then as said, if the bank closed down, if this investment banking firm closed down today, technically you'll get back $200 per share, but considering 20% margin of safety plus being conservative and all, the amount that I actually came out with, this calculator came out with, is $143.83. That's the amount of money you're going to get back per share if Goldman Sachs actually goes all the way to zero, crash all the way to zero. Alright, so we can see right now again, current price $198.23, and right now if Goldman Sachs crash all the way to zero, you get this $143. So you kind of lose like $50 per share. Okay. Price prediction movement, not so much, because I don't think many people will be selling options on this because it's a very, very expensive stock. So I should not I will not talk about this thing so much. I'll talk more on, how about later I'll compare maybe JP Morgan and I'll look at the charts. Okay, so for the technical setup, it looks like it's a sell. Based on the technical, how it's set up, still downtrend. So overall it's a sell. Okay, so right now let me just compare it with JP Morgan while I load other stuff. Show you guys some other stuff. So okay, so right now I'm at, let me just go to Goldman Sachs. Alright, so you can see down here, this is the 50 days moving average, here the 200 days moving average. And when we look at Goldman Sachs chart here, we see that there's a very, very, very strong resistance line here, and then just nice is also quite near the range of the 50 days moving average, so it's suggesting a rather strong resistance around this point. You also notice that it's holding steadily along this. So this is a 200 days moving average. So 200 days moving average is typically the strongest one, and if the stock is always below 200 days moving average, look at this, it always goes below, means it's a bearish trend. So until it breaks above, then we can safely say it's a bullish trend, right? So this time around, Goldman Sachs got 2 levels to break. One is this 200 days moving average. Second one is this rather strong, you see, look at this rather strong resistance line. But we notice that Goldman Sachs always rebound away from this 50 days moving average. So if you're going for a short-term play, you might want to go for a long all the way till this point, and then you start to maybe take your profits and all that. So overall it's still a sell. I would not recommend a buy until you break past this 20 days moving average. And in fact, whatever I'm saying here right now today is all like, go back and do your own due diligence. Okay, And then we look at the MACD, it suggests that it's going to go up again. The MACD also is, when you look at a histogram, the dark red become, the bright red become dark red. So it's some kind of a bullish signal too. But then overall, I would say I wouldn't go for it yet. Okay, so now next we also look at, so what happened, okay, what happened this was that this fallout here all the way December, this period, right, was that Malaysia actually sued Goldman Sachs for the YMDB scandal, because Goldman Sachs was the company that I think helped YMDB come up with the bonds of don't know how many billions of dollars. So it's a huge thing, and the country actually sued a company. So obviously we know who got more power lah, right? Obviously a country, right? So we also look at what Warren Buffett did. Buffett actually bought Goldman Sachs actually at that position last September. His position entry price was $196.63 on average, whereas current price of Goldman Sachs is $197, so it's really not too far off. You're kind of in line with where he bought, but then he's going to hold for a long term so if you are going like him, if you want to ignore all technical indicators and everything, right, you just buy and hold for the super long term okay. So now let's take a look at another company I want to compare with. This is JP Morgan. Now this is a bank, so that's why you don't see Goldman Sachs here. We look at it, it is undervalued from a price to earnings basis, and it's also undervalued from a price to earnings to growth model. Okay, we are looking for stocks that are below 1. This is 0.7. Goldman Sachs was actually 5 point something, so this is actually pretty much more undervalued. Now, taking into account that everything down here of the fundamentals is the same, right now we also can see that, look at here, the ICBC, I told you guys, right, the China banks are so much, are actually also quite big in the company. In fact, they're actually bigger. I'm not too sure what's happening here, but then if you actually go research it up, they actually hold 3 point something trillion dollars, whereas JP Morgan only hold $2.5 trillion. Okay, so there's maybe some sort of discrepancy over here, which I can maybe look towards fixing. Now we look at the financials, it actually is slightly better than Goldman Sachs in the sense that there's more green compared to red this time around. And for red flag indicator, there is actually only one red flag that you should be aware of. Okay, now moving on to confidence rating, we have a confidence rating of 6.5 upon 10, and the growth entry price is $149.24. Well, that makes sense because why? Because this is below 12. Anything below 12 is undervalued. And then also PEG is below 1, so anything below 1 is also undervalued. Alright, so it makes more sense here. And for dividend entry price is $54.40, and if JP Morgan were to close down today, you get back $49.41. So for this, you can actually go for options play too, because it's much cheaper than Goldman Sachs. Alright, now when we look at the technical setup, again, it's a sell. Why is it a sell? Well, the reason why is really ultimately comes back down to below the 200 days moving average, because you see stocks usually follow 200 days moving average very, very closely, like rebound here. Then after that, the next challenge will be this 50 days moving average. Then after that, come back here, rebound again. Then when you try to break above, it rebound down. Then try to break above, rebound down, try to break above, rebound down. So 200 days moving average is a rather strong moving average. And again, we see some consolidation between this point here, whereby it's trying to hover around this 50 days moving average, try to break above it, got rejected, so it's coming down again. All right, so this, by the way, is a daily chart over 3 years okay. And so the entry price is $149, but that makes sense. Well, when we take a look at all of this, it actually shows that this is the most fair value, it's the average of it already. Okay, so that also makes sense when you take a look at the price to earnings to the EPS growth over the past 10 years from $2.26 all the way to $9. That's a almost a 4 times increase. Okay, almost a 4 times increase. So we actually calculated a growth rate of 16.6%. So when we take that into account, 16.6%, this is really quite conservative really, because Morningstar is actually projecting a 20.71%. Alright, so we're actually only projecting a 16.6%. We get a average, the most stable entry price of $149. Then you ask me, hey Yong, it has never actually went past this level. Well, that's why this banks in general are usually currently the banks are slightly overvalued, slightly undervalued. They are growing at a faster pace than what their intrinsic value is, and that's the reason why. Warren Buffett actually bought JP Morgan a few times. In fact, he actually bought it once over here, $104. Then after that, he actually buy JP Morgan again at $104. So Warren Buffett sees the value in the company. The EPS is growing so much, and I remember back then where we actually attended the webinar where Mary Buffett also said something like, you don't look at the share price, you look at the EPS increase, because that's ultimately the intrinsic value of the company. Alright, so that's also what value investing is all about. So right now I would say similarly also reflect the same thing, whereby let's take a look at this. When we draw a resistance line here, we can draw a clear resistance line here like the best fit line. That's what I call a best fit line. So it's trying to break above, it can't break above, and if it does break above this 200 days moving average for like maybe a few days, then you can confirm that it's a solid breakout, not a false breakout. Then you can buy it, and then by all means hold it for a long term, hold it for its dividends, sell options, sell put, sell call. It's all up to you. Alright, so that will be all for today, this stock. And if you guys have any other questions, any stocks that you guys want to look at, feel free to ask me. Then I can try out this calculator also to make sure that the stocks are all actually there's no flaws within this calculator. Alright, so thank you very much, and I will see you next time.